This is part 2 of a 3-part series. Part 1 covered the 10 things every gold beginner must know. Part 2 goes into how to buy safely and avoid scams. And Part 3 takes you through storage, selling, and making your very first purchase. Links to all 3 are in the description. If you haven't watched Part 1 yet, start there. The link is on screen and in the description. Welcome back to Bitcoin Capital Gold. We produce a free daily newsletter to help you make rational decisions when investing in gold and Bitcoin. The link is below and in the description. It is usually a quick 5-minute read. Let's get into it. Before we go anywhere else, here's the single most important piece of advice in this entire video. As a beginner, stick to bullion only. Recognized coins and bars from sovereign mints and LBMA-approved refiners. That is it. Everything else, collectible coins, commemorative pieces, jewelry, numismatic coins, adds complexity you do not need and risks you cannot easily manage at this stage. If someone is trying to sell you anything other than standard bullion as an investment, that is your first red flag. Now let's build on that foundation. We recommend beginners start with fractional gold. If the idea of buying a full ounce feels like a big commitment, fractionals are the answer. Fractional coins are popular, highly liquid, and easy to sell, making them excellent for smaller budgets. They make gold genuinely accessible and allow you to build a position gradually as your confidence grows. Fractional gold coins come in 3 main sizes: 1/10 of an ounce, 1/4 of an ounce, and 1/2 ounce. As a real example, a 1/10 ounce American gold eagle as of April 2026 typically costs between $520 and $630 USD. That price fluctuates with the spot price of gold plus a premium for manufacturing and dealer fees. Expect higher premiums on fractionals, often $25 to $80 above what you would pay proportionally on a full ounce because the fabrication cost per ounce is higher on smaller pieces. But for a beginner who wants to start now rather than wait until they can commit to a full ounce, fractionals are the right entry point. Start with 1/10 or 1/4. Build your understanding and work up to full ounces as your confidence grows. Stay with us. Later in this video, we are going to cover the 4 red flags that catch most beginners out and a place to buy gold that most people would never think of. Now, let's look at the 2 main types of bullion, coins and bars, so you know exactly what you're comparing when you shop. Gold coins from sovereign mints carry slightly higher premiums than bars, largely because of their intricate designs, legal tender status, and the cost of minting. The most widely recognized include the American Gold Eagle, the American Gold Buffalo, the Canadian Gold Maple Leaf, the British Gold Britannia and Sovereign, and the Australian Gold Kangaroo. These coins are recognized by dealers worldwide and are among the easiest to sell, particularly important when the time comes to liquidate. Gold bars are typically 99.99% pure, 24-karat investment-grade gold, and generally carry lower premiums than coins of the same weight. Well-known bar brands include Perth Mint from Australia, producing 50-gram bars with a government guarantee and a distinctive matte finish; Credit Suisse from Switzerland, 1-ounce bars popular in Europe; and Pamf Suisse, globally recognized, available across international markets and airports with a strong reputation since 1979. Bars are a good option for investors building larger positions where the lower premium per ounce makes a meaningful difference over time. For absolute beginners, coins offer slightly better liquidity. They're easier to sell quickly because dealers everywhere recognize them instantly. Here are the approximate premiums for common products so you know what to expect before you shop. American Gold Eagle, 91.67% pure, 22 karat, 6 to 7% premium over spot. American Gold Buffalo, 99.99% pure, 24 karat, 6 to 7% premium over spot. 1/4 ounce American Eagle, around 13% premium due to smaller size. Royal Mint Britannia, 99.99% pure, approximately 4% premium. Canadian Gold Maple Leaf, 99.99% pure, generally lower than American Eagles. The pattern is consistent. Smaller sizes carry higher percentage premiums. Larger products carry lower premiums. As a beginner, 1-ounce or fractional coins from recognized sovereign mints give you the best balance of reasonable premiums and strong liquidity. Now, the red flags. These are the 4 patterns that catch most beginners out. Every single one of these is a real trap. Red flag 1. The price is too good to be true. Gold has a live, publicly verifiable market price anyone can check right now. If someone is offering gold significantly below spot, that's not a bargain, it's a warning sign. Nobody sells genuine gold below what they could get on the open market. Red flag 2. Pressure selling. Legitimate dealers do not pressure you. No artificial urgency, no cold calls, no guaranteed return promises. Gold is a straightforward product. You pay spot plus a stated premium, you receive the product. Any deviation deserves scrutiny. Red flag 3. No verifiable credentials. A legitimate dealer has a physical address, a company registration number, a published returns policy, and a track record you can check. No verifiable history, no physical presence, no industry membership. Walk away. Red flag 4. Unverified online sellers. Platforms like eBay have some legitimate sellers, but also a disproportionate share of fake gold, particularly fake coins. Only buy from sellers with long, verified track records and gold-specific feedback. 2 more worth knowing. Pawn shops. Generally avoid buying gold from pawn shops. Authenticity is often questionable and prices can be high. The specialist equipment needed to verify gold properly is not standard in most pawn shops. Gold IRA companies. Some are legitimate. We covered the gold IRA concept in Part 1, but many operate with extremely high markups, sometimes over 30%, and aggressive marketing. Research any specific provider thoroughly before committing. Let's talk about where actually to buy, and one option that surprises most people. Well-established online dealers include Bullion Vault in the UK, the Royal Mint Direct, APMX, JM Bullion, SD Bullion, Scottsdale Mint, and Bold Precious Metals in the US, Silver Gold Bull in Canada, Degussa across Germany, Switzerland, and Spain. Prices vary between dealers, sometimes meaningfully, so always compare 2 or 3 before buying. And here's the one most people never think of: Costco, the warehouse retailer. Costco has been selling gold bars at competitive prices. Their volume purchasing and low margin model means premiums are often very reasonable, a completely legitimate option that most beginner gold guides never mention. It's also worth finding a local coin or bullion shop in your area, particularly one with XRF and Sigma Metalytics testing equipment. A good local dealer can verify any purchase you're considering before you commit. That relationship is worth building early. You can also buy spot gold on platforms like Interactive Brokers. You must first enable trading permissions for metals in your account settings. Once enabled, you can trade spot gold using the ticker US Gold or XAUUSD for London spot gold. To execute the trade, select the asset, click Buy, enter your desired quantity, minimum 1 troy ounce for spot gold. Choose an order type, market or limit, and transmit the order. For ETFs, you can trade, for example, GLD. We will do more video on gold ETFs later. Now let's talk about fake gold, because it's more common than most beginners realize. The most common fake is gold-plated tungsten. Tungsten has almost exactly the same density as gold, which makes simple weight tests unreliable. A coin or bar that passes a scale test can still be entirely fake. What to look for? Hallmarks and mint marks. Every genuine bullion product carries specific identifying marks including year, weight, purity, and the mint's own mark. Counterfeits often get these subtly wrong. Compare what you're looking at to images on the official Mint's website. Assay cards. Bars from refiners like Pamp Suisse and Valcombi come sealed in tamper-evened assay cards with unique serial numbers. If the seal is broken, treat it with serious suspicion. Serial numbers on higher value bars can be cross-referenced with the refiner's records. The simplest protection of all: buy from reputable bullion dealers in the first place. Finally, premiums and spreads. You'll always pay above spot price. The premium covers manufacturing, packaging, insurance, and the dealer's margin. Closely related is the spread, the difference between what a dealer charges you to buy and what they buy back from you. If a dealer sells at $3,100 and buys back at $3,000, the spread is $100. Over time, a wide spread erodes your returns. Always look at both prices, not just the buying price. On payment, avoid credit cards where possible. Most dealers charge an additional 1 to 3% processing fee. Bank transfer is the most cost-effective method. So, let's close part 2. Stick to bullion only. Start with fractionals if a full ounce feels like a stretch. Compare premiums across dealers. The table we covered gives you real benchmarks. Know the red flags. Buy from established dealers, and yes, Costco is a legitimate option. Build a relationship with a local dealer with testing equipment. Always check both the buying price and the spread before committing. Pay by bank transfer. In part 3, the final video, we cover storage in detail, how and when to sell, and a step-by-step walkthrough of your very first gold order. And join our free newsletter, everything you need to know about buying gold and Bitcoin, usually a 5-minute read. The link is below and in the description. If you enjoyed this video, subscribe to Bitcoin Capital Gold and hit the notification bell so you don't miss part 3. See you there.